keep talking to the customers and understanding what their pain points are, what their perspectives are, what their anxieties are around this. That always helps. I mean, I've seen many times that uh, we 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 have a decision to make around a particular thing to implement it in this way or that way.
Hello, everyone. Welcome to Startup Story Spotlight. This is a platform where we invite startup founders, innovators, and entrepreneurs to share their journeys. Today, we have with us Abhishek sir and Nalin sir from Snapmint, who will share their journeys. Sir, can you please talk about your startup background? What is it that it does, and how it is evolving into the credit market, and how it is revolutionizing the new market by offering your services? Can you please tell us about your background about the startup, sir?
Sure, absolutely. I think let me begin from how we got into the market and where is the problem that we see and how we are looking to solve it. So our journey started off way back in 2017-18 when we were working with one of the e-commerce companies as a advertising partner, and the company that just launched this credit card EMI on their checkout page, and they had asked us to run a campaign for that. And we were excited. We ran that campaign for them, and what we saw was that there was a 25% lift in consumers who reached the payment page of the e-commerce company. But the transaction lift that came in from those transactions from those consumers was literally zero. And when we talked to the consumers told us that, hey, we don't have credit cards. So these EMI options don't make sense to us. We did a very quick research at that time and saw that there were close to 450, 500 million odd consumers in India with PAN cards and just about 20 million consumers with credit cards. And that essentially was, we believe that that's a massive opportunity because there are so many consumers out there. Okay, today, I mean, close to 300, 400 million, in fact, consumers who do not have credit cards. So even today, right, if you look at the number of consumers with PAN cards, it's 650 million, while the consumers who have credit cards is just about 35 million. So 600 million consumers in India who have PAN cards but no credit cards. So the entire idea is that how do we really then give affordability to all of these consumers, a lot of whom today are actually transacting online. So, we all know that there are close to 350 million odd UPI users in this country. They're all transacting online, and just 35 million consumers with credit cards for affordability. That does not make sense to us. And that's essentially the problem we're out there to solve.
Sir, my next question to you would be, what is the founder background that you have, sir? What is the uh, background of the founders that you have and you have started this wonderful startup?
Sure. I mean, three of us, we are in fact hostel mates from our IIT Bombay days in 2004. That's when we got out of IIT Bombay. We probably know each other for the last 20 years now. And have had diverse backgrounds. So two of us, Anil and I, we have been entrepreneurs together since 2007. This is our fourth venture together. Abhineet, he comes from an extremely rich background in consulting and startups, really, right? So he was the head of marketing for Jabong when Jabong started off in India. Then head of growth growth and marketing for Oyo for 3 years is where he was, in Ola and Swiggy. Yeah. Then Ola and Swiggy.
For me, and I had short stints in Ola and Swiggy on the revenue side. Broadly, what I think when I heard about, Nalin and Anil started on the idea a little before me, and when they started and they told me that this is something that we are planning to do, and they said that that we are selling, say, mobile phones on installments online. To me, initially, it didn't sound as attractive. uh, because I pictured myself as a customer and I felt that I would buy it using my credit card and make a purchase. But they said that we are getting a good customer response and customers are buying and they seem pretty happy. So what I decided to do is to call up the customers and understand whether it is actually making a difference and understand directly from customers what what they feel about this service, right? So I spoke to a few customers and called up a few customers, and one of the discussions with one lady customer uh, convinced me about the opportunity overall. That lady had purchased a smartphone. She was earning something around 30,000 rupees a month, and she had purchased a smartphone on installments. And when I asked her how was the service, and she said everything is fine. And when I was about to disconnect it, she said that, my salary has gone up from 30,000 to 36,000 rupees now. And so I congratulated her and asked her if she wanted to close her installments or she wants to increase the EMI that she pays so that it closes soon. So her response was, I want to buy a smartwatch. Can you let me buy a smartwatch? I don't want to close the installment. So then I realized that for these consumers, for a lot of these consumers, especially in that income bracket, and it is important to have this installment based uh, financing to achieve the purchases that they want. And once the customer is going to have a very, for a customer for whom these services are not as normal as it is for us. For instance, for us, there are a lot of credit card companies that give us something to make this installment payment or make a payment which is later. uh, but there is a huge segment of customers for whom these services don't exist, and once they experience it, they're going to repeat pretty often because they value this service. And that's when I decided to go ahead and join them, and that's how we have been working on and scaling the business for the customer.
Sir, my next question would be, what were the early challenges faced by your startup? What were the early obstacles that you had faced during the initial stages of your startup, sir?
Yeah. So the early stages for the startups was that it was we have partnered with a few banks to actually start giving out these interest-free credit to the consumers. And the challenge that we faced was that the underwriting process was not very consumer friendly, and that created a massive challenge because in the online world, right, people expect everything to be done instantly. And if you don't do that, then what happens is that if 1,000 consumers come and only 40 or 50 of them actually convert, which is the biggest problem, right? And this is what we could not solve in partnering with the banks, and hence we could not really get to many consumers. Uh, so that's, I mean, that was essentially the initial challenge. And so what we decided to solve for this challenge was that one is we decided that let's go ahead and get our own NBFC or a license from RBI for lending, so that we can lend on our own terms. And that helps in two ways. One is lend on your own terms, and also it helps you take care of all the regulatory challenges. It's good to be working with RBI rather than away from it. So that's something that we did very early on, which really helped quite a bit. And today, in fact, we help a lot of brands and merchants now increase their sales by over 10 to 20%. And and that's essentially what the value proposition we're able to give to a lot of brands, and that's the reason why the number of brands who are partnering with us is growing exponentially. And so that's I mean, so the challenge that we saw very early on, it took us time to solve for that challenge by getting our own lending license. But yeah, after that, it's been a great journey.
Yeah, I think the other thing is we do operate with a lot of merchants, and we on their D2C brands, say like brands in the smartwatch space, brands in the headphones and electronics and the fashion space, and we do come across this concern that which I also had in the beginning, which is the a lot of decision makers are affluent people, and they think of themselves as the customer, but ultimately we're targeting a young customer who does not have a lot of financial options, and looking at it from that perspective and evaluating the merit of the service is something which took us a bit of challenge initially. That was another challenge we had initially.
That's very nice, sir. The challenges that you have faced, you have explained it really in a nice way to the audience. So, my next question would be, what is the target market that you are targeting for Snapmint?
So, I mean, so the target market essentially is that, if you look at the entire market segment in India, right, you have those, on one hand, you have the top 30, 40 million odd affluent consumers who have credit cards, right? So you have cred, you have credit card companies who are serving them. The challenge comes with the next 200, 250 million odd consumers who use UPI. The entire mass middle income segment, the digital first consumer, essentially, these are consumers who probably, work in, for example, call centers, or, they also work in banks for that matter, right? So I mean, there's so many these people that we meet every day. That's the entire consumer segment that we're talking about, and that consumer segment is underserved, and that is where the challenge in services comes to them. And those are the consumer segments that essentially is the young digital consumer segment that you're going after, because credit card companies again tend to serve companies who work in what is called as a Cat A company, right? Listed companies, and if you're an employee, those companies where the credit card come and serve you with those cards. But that entire massive population, the 250 million consumers are transacting online today, and those are the guys that we're actually targeting. So our average age of consumers is roughly 26 years. So very young digital consumers, and almost 100% of them use UPI today.
That's really nice, sir, the way you have explained your target audience for your startup. So, my next question would be, what are the emerging trends in the industry as of now, sir? According
the
to you?
multiple trends, I think one, if you look at the entire Indian payment and lending infrastructure, the RBI and the NPCI, for instance, which is the payments arm of the thing, both are putting massive infrastructure upgrades into the Indian ecosystem of payments and lending. So, for instance, prior to COVID, the way you could do KYC was not as evolved. Digital KYC now, the way a customer can do digital KYC while making these online purchases is much more simplified for the customer, much more customer friendly. Some of the things like in our business, installments is one of the thing that customer has to pay, and many customers wants to set up automated payments so that they don't miss and their credit score doesn't get impacted. So previously there used to be a much more cumbersome process, but of late the processes such as UPI based simple instructions have been set up so that the customer can set up automatic payments, and this again happens in just as seamlessly as you make a UPI transaction. There has been another major upgrade from government side. It's still in the early stages of development, but it has been implemented by multiple banks. It is the account aggregator method that the government has implemented, that RBI has implemented, where especially since we lend to a lot of customers who have thin credit files or are new to credit. For these customers, we need to understand the bank cash flows and then so account aggregator makes it very seamless for us to analyze that with customer consent. Otherwise, the processes were very cumbersome. So this is one big trend which we are riding on. Second is that there is a huge D2C focus across the Indian retail ecosystem. If you look at it, online retail ecosystem. So previously, prior to COVID, most of the brands used to look at offline as their own channel, and online used to be focused largely with the marketplaces. But during COVID, the brands realized that they have to build their own customer facing channel, and they have to they have to connect with customers and get insights and iterate with their products and pricing and features. So with the D2C as a trend coming up, they I mean the brands did realize that they need some way to attract the tier the customers who are not just affluent but also the next set of customers. And to attract that, uh, brands initially started with coupons and cashbacks, but soon they realized that the amount of money they have to invest in uh, coupons and cashbacks is not returned as much as well. With that investment, they started investing in split payment as an offering to customers, and they realized that this gives much higher return to them and attracts customers much better. So these are two trends. Of course, the entire where everyone is riding on the wave that India is going through a massive digital upgrade, like internet is going through everywhere. I'm not going to that, but that is again something which drives a lot. Nalin, you want to add something else to it?
Yeah, I mean, that's true.
Sir, that was really wonderful the way you have explained the trends going on in the market. Sir, my next question would be during COVID-19, what were the challenges that you had faced in terms of getting customers? What were the challenges that you had faced during that COVID-19 pandemic, sir, in terms of the banking industry and the credit industry?
So during COVID, I mean, there were two challenges, right? So one challenge was from the side of the merchants and the brands, which was it became quite difficult for the brands to actually service a lot of pin codes. So today we service 20,000 pin codes in this country, right? Which is almost 90% of the country we service today, right from Jammu to Meghalaya. Uh, the challenge that we faced was that because of the restrictions, a lot of brands were unable to ship the products to a lot of these locations. So that was one big challenge that we saw during the COVID times, which impacted the sales, obviously. The second challenge was also from the debt side, wherein because of the moratorium that was introduced by RBI, uh, access to debt capital had had really become difficult. So that again meant slowing down the growth, though we knew that I mean, the market is continues to be underserved, but the availability of capital had suddenly come down because of the moratorium issue. So these were the two, I would say, the two biggest challenges that we saw during the entire COVID period. Uh, Collections, we saw it only up to a certain extent because because we have been going after a largely underserved segment with very strong intent to pay. Collections were not affected as much for us because consumers, consumers did pay us back extremely quickly. So the delinquencies were not very high. So yeah, but the main challenges were around from the merchants and the brand side of delivering the product, and the debt side of access to debt capital to actually grow your business.
I mean, although COVID did hinder us in the first 6 months, but overall I think it did trigger a lot of positive changes which helped our business grow. I think one of the things being that again the D2C wave that picked up, which helped us get which helped us work with a lot of merchants and test our product and now scale it with multiple merchants. Second, we did see uh, the 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 push from the RBI and the payments ecosystem to payments arm of the governments to implement upgrades on the digital side, because nothing was happening offline, so everything had to be ready for online. So there were that whatever could have probably happened in next 5 years happened in 1 or 2 years, and that gave a massive push to our customer onboarding and the customer experience that we can provide to the customers. uh, yeah, and I think from our side, we had been running. We were a pretty early stage startup. A lot of the people, especially investors, when we spoke with, they had questions about whether our underwriting models are robust enough to withstand a crash and say a spike in say if there is some problem that happens in the market, how will your models behave, how will your customers pay back. So we did see a small spike, but it was way well within the bounds, and it was the customers did pay back. There was a very small increase in terms of the customers who were not paying back. So that gave us a lot of confidence to us in terms of what we were doing. Our underwriting models are working fine, and also gave a confidence to all our investing partners that the what we have built is actually something that is quite robust in terms of underwriting the customer, even though we are going after a segment which not many financial institutions have solved for.
So my next question would be, how has the market evolved over the last couple of years? The fintech industry has how has it evolved in the last couple of years, right? According to you.
The last couple of years is in, I think as previously mentioned, right? So UPI continues to grow, and a lot more consumers are beginning to look at the UPI infrastructure and pay via UPI. But the other big one has been that the merchants, right? The merchants have also started adopting digital payments. A lot of merchants who used to adopt cash and would not transact without cash today, a lot of these merchants are now accepting digital payments, which are going directly into the bank accounts. So that's been one big trend in the last couple of years. The second big trend has been around the regulations. Right, there are a lot of other companies who came in with some innovative products, etc., which were not very relevant, probably to which were not in the right RBI guidelines. Right, so those regulatory changes came in, and a lot of companies who were going around the regulations, they had to really shut down or close those business lines to really, make that matter. So regulations have become a lot more robust, while digital payments, they continue to grow, and the merchant acceptance of digital payments has grown, which just brings in more confidence to companies like us in the entire ecosystem.
I think overall in the market, the other thing that got established is the need for so 2 to 3 years ago, when we spoke to brands about building installment based payment as an option on their portal, it was viewed as something, as an alien concept at that time, roughly 2 years ago. Although some brands had done it, but it was acceptable in say higher price points, but say for a small 2 to 3 thousand rupee price point, that was not as much accepted. But over time, I think merchants and brands have realized that the power this has in converting a specific set of customers, and a lot of brands are making this a part of their growth toolkit in terms of acquiring customers. The brands are much more like open, and they have active plans in implementing this as customer acquisition strategy and retention as well.
Sir, my next question would be, what are the services offered by Snapmint to its customers and the market as of now, sir? Like, what are all the services? Can you please tell the audience?
So service is fairly simple. We just offer one simple service to the consumers, which is buy anything that you want with our merchant partners on interest-free credit. You don't need a credit card. There is no late fees or any hidden charges you ever have to pay. And that's the simple value proposition. And probably that's the value proposition which is not offered by anyone else in this country.
That's really nice, sir, the way you explained it. Sir, my next question would be, how does Snapmint plan to differentiate itself from its competitors in the market?
So the way we
I think
differentiate ourselves from the competitors again is plainly from two perspectives, right? So one is the consumer perspective, where we are clearly telling the consumer that, hey, there are absolutely no hidden charges, no late fees, nothing. Everything is available to you on interest-free credit. And on the other side, we are helping the brands by being the only company in this country who actually help the brands grow the sales by 10 to 20%. And the other is, when consumers, I mean, in the online industry, returns is extremely high, right? We see as much as 30 to 40% returns in some of the existing brands that we work with. The returns when a consumer transacts with Snapmint is actually less than 5% for the brand. So I mean, these are the two key differentiators that we have with respect to anyone else who would operate in the market. Avneet, you want to add anything?
Yeah, I'll just elaborate that. I think so. I mean, again, if you look from customer side of it, the first of all, the customer making a purchase on any brand or any product, the uh, the number of steps we force a customer to do are extremely low. Even a new customer who comes to purchase with Snapmint, we try to make the customer documentation very less. A lot of customers think that I will have to upload a lot of documents, share a lot of information. We try to minimize that, and so that the customer making a transaction, it is extremely simple for customer. Two, as Nalin mentioned, is that there is no late payment or hidden fee. Like if you transact with say a credit card and you're 1 day late in your payment, you get penalized by a lot of penalized very badly. We do know that sometimes customers do miss their payments, but it is not with an intent of missing it. They may miss it by mistake, and then we don't want to penalize bad behavior and make money out of bad behavior of the not a bad behavior, but a small mistake that the customer made. So we don't make money out of it, and we see a lot customers appreciate this a lot, and that is one of the reasons why customers stick with us a lot. Uh, so that's largely on the consumer side. The consumers also appreciate the fact that they can take a 3 month they can pay over 3 months, and yet they don't have to pay an interest. If you do it with say credit card, you have to pay a very high interest rate. So this is on the consumer side of the story, and the merchant side of the thing is it's the merchant sees as a way to unlock this customer base. There are other competitors we do have which offer kind of similar services, but the kind of customer journey they offer or the kind of approval rate they give is such that the customer adoption is way lower than what customer adoption merchants see with us. And a lot of merchants have implemented both Snapmint and Snapmint competitor, and then they realize that the customer adoption of Snapmint is way higher. I mean, it's of the orders of magnitude of 3 to 4 times of our competitors, and hence they work with us because they see their customer experience being very well taken care by Snapmint. They see the order values with which Snapmint the customers orders are placed are much higher, because say for instance, it's a thing customer is buying a headphone of say 1500 rupees. The customer sees it as a customer is buying a 500 rupee per month headphone, and hence the customer is able to sometimes go from 500 per month to a 700 per month kind of a headphone, which ultimately translates to a 2100 rupee product purchase, which for a brand is a great way to sell their premium products, and that to a less affluent segment. So brand sees this as a really big value proposition. Instead of relying on discounts to sell the lower price point, to sell the higher price point products. And of course, as Nalin mentioned, the RTOs where the product is shipped back without customers accepting is a big challenge in with COD, with cash on delivery. And we are converting customers who are paying with COD into a prepaid payment method where the returns or RTOs are lesser, so the brand see it as a great value proposition overall.
So my next question would be, what advice will you give to your fellow entrepreneurs or upcoming entrepreneurs in the industry who are looking to start a fintech startup, or anyone in this space or this market, sir? What advice would you like to give to your fellow entrepreneurs?
Sure. I think I mean, there are two sides to this, right? So from the fintech side, obviously the financial services market is huge, and the underpenetration of financial services is there across segments. It's right from payments to lending to insurance to wealth. There are huge pockets, and India is a land of not one country but multiple countries, multicultural, right? So solving for different segments is important. And that's how everyone should keep looking at innovation for particular market segments and go out and solve it for them. Not the one company trying to solve for all the market segments is not quite possible with 1.4 billion people in this country. So that continues to be huge. Second, in terms of entrepreneurship, I would say is that I mean, this is the Anil and I, this has been like four different companies before this. Vineet has worked with multiple startups before this. And startup journey is more of an experience. You do something, you make mistakes, you learn, you fail fast. But the key has to be failing fast and learning from your mistake as fast as possible, and never get bogged down. If if you fail because of something, it always is a new learning opportunity, and whatever you do next will always be better than what would you have done previously. So take that in the stride and keep moving on, and keep growing, and success will come.
I think, yeah, I mean, we're pretty early in our journey, so but two things that have helped us uh, personally, what I feel is uh, keep talking to the customers and understanding what their pain points are, what their perspectives are, what their anxieties are around this. That always helps. I mean, I've seen many times that uh, we have a decision to make around a particular thing to implement it in this way or that way. It always helps to test with the customer, get their feedback, talk to them. It always helps. Second is, in a very early stage, my suggestion would be to focus on a small niche and work and make sure that you capture that niche with a very high uh, customer impact
Market
and or
share, yeah.
market share in that niche, and then expand to further niches instead of solving for a really large total addressable market and trying to build for that. Uh, those are two things I would suggest.
So it's very nice the way you have explained the advice that you have given to your fellow entrepreneurs. The questions are done for today, sir. I hope you have had a great day, and if any mistakes done,